Hello and welcome. The R word looms large over the World Economic Forum at Davos in particular and over the global economy in general. And to talk about what could happen to global growth prospects this year and its impact on the India growth story, I'm joined by one of the world's top economists, the Deputy Managing Director of the International Monetary Fund, Dr. Gita Gopinath. Thank you very much, Dr. Gopinath, for joining us. I want to start by getting you to talk about your sense of the R word. And the survey put out by the World Economic Forum of global economists seems to say that 70% of them think that a recession is around the corner this year.
So Rahul, the way I would describe the outlook is that we have a tough year ahead, 2023, but we certainly are seeing signs of resilience around the world. So in terms of a global recession, I think we are still a fair bit away from it. Now, it could happen. We could end up if there were more downside risks that emerged. But in terms of our projections, which we'll actually put the numbers out at the end of this month, we're not in a global recession territory. Now, of course, there are individual countries that are closer to a recession than others are, and that's something that several people are talking about. There's still the war. We still have inflation that's high and monetary policy tightening that continues, and we'll see the consequences of it. So we should see a global economy that slows this year. But by the second half of this year, we expect to see a recovery and then a rebound into 2024. So that's how I would describe the outlook.
But the one other perspective that I'm hearing is that things aren't quite as bad as initially imagined. When people were talking about what might happen in Europe during the winter because of the energy crisis and the manner in which the war was playing itself out, would you say that some of those worst case scenarios haven't really played out, and a slowdown, even if it's a sharp slowdown, is more likely than out and out recession?
So that's the part when I said that there are signs of resilience. You're exactly right. I would say compared to our forecasts in October last year, the US and the Europe surprised on the upside. US because labor markets continue to remain strong. Europe because the winter turned out to be warmer than feared. So that has both helped. And then we have China. So China moved dramatically away from its zero COVID policy. So we're going to have a couple of months where things are going to be very tough in China. But then we expect to see a rebound happening in China's economy. So there are certainly some positive turning points. But let's not get ahead of ourselves. I think we still have a difficult time ahead.
The World Bank recently increased India's growth outlook just a little bit, 0.2 from 6.8 to 7, suggesting that things were better than they had initially apprehended. What's your sense of the way the Indian economic growth is panning out at this moment?
So we have the numbers that we put out in December, which is 6.8% for this fiscal year and 6.1% for the next. We're seeing a strong recovery in India. Compared to other countries, we say, it's relatively a bright spot. So I think it's in a good place. And importantly, many countries are looking to India as an investment destination at this point, especially as they try to diversify out of other countries, including China.
Let's talk of China. China opened up all of a sudden, which has created a massive health emergency at this moment. You've tracked the pandemic very closely, so give us your sense of what you think is happening in China and the uptick in Chinese growth. Do you see this as being very short term, or do you think that China will be able to sustain its growth momentum over a longer period of time?
So what we have right now in China is indeed a health crisis with the pandemic going around in full force. If you look at peak infection rates and so on, we're seeing peaks, for instance, happen in Beijing. So the expectation as of now is that much of this will come down by the end of the first quarter, and then we would see a strong recovery in China. So there's going to be just that rebound coming because mobility will come back and restrictions will be lifted. But there are still factors weighing on growth in China, one of which is the property sector. The property sector is in crisis. The government is doing a lot of actions have been taken. Recently, they've announced many measures, so that could help. But that is an important concern. External demand is slowing as the global economy slows, so that obviously has a negative factor for China too. But again, looking into the future, China needs greater productivity growth. It has aging demographics, and we saw the headline today, which is population actually fell in China for the first time. So we need higher productivity growth in China. That requires more private enterprise a more level, even playing field between the state-owned enterprises and the private enterprises. Again, in December, the authorities came out and said that they were going to focus a lot on growth and on this evenness, but we'll see what exactly is announced in terms of policies, because we haven't seen that yet.
What's your sense of the future of the globalization project? Because with the United States spending so much time on reworking its industrial policy, trying to encourage semiconductors, manufacturing within the United States, do you see a technological Cold War get worse in the months to come?
We've seen signs of technological decoupling between the US and China already. It's been happening these last few years, and given recent policy announcements, I expect that that will continue, unless there is a way for the countries, to come back and work even more closely together. We are worried about fragmentation risks in general, in terms of different trading blocs, different trading partners. It's perfectly reasonable for countries to want to have more resilient global supply chains and to build greater national security. I think that's valid concerns. But we are concerned that, in reaction to this, they're going to put policies in place that lead to what we call runaway fragmentation. And that is very costly for the global economy.
Explain why you're so apprehensive. If you're saying it is very costly for the global economy, a lot of people would say, hey, a country like India could potentially benefit from this idea of minilateralism. The fact that there is so much focus on nearshoring and friendshoring at this moment could potentially benefit a country like India at this juncture.
I mean, without a doubt, what the world needs to do is more diversification in where they buy from, right? And in that context, India certainly is can benefit from it. The risk is countries trying to bring all the production home, which is another feature that we're seeing, kind of what's called inshoring, by providing additional subsidies to their own firms and companies to bring production home. The problem with it is that when one country does it, maybe it's beneficial to you, but you're going to have retaliation from the others. And you see that. I mean, it usually leads to further trade wars, further retaliation. And then you end up in a world where things are much more costly for consumers and for firms. And we saw that before we saw the increase in trade over the last 30 years or so. So we have to protect the gains that we have from trade and make sure that the policies don't lead to decoupling around the world.
Let's speak about inflation and interest rates. We had the Reserve Bank of India Governor Shaktikanta Das at the Business Today Banking Summit recently, and he spoke about how he thought that interest rates would be high for long. That this idea that interest rates have peaked, he doesn't seem to agree with. His sense is that interest rates would keep rising in the foreseeable future. Do you share that assessment?
To bring inflation down durably, I mean, we expect that interest rates will have to stay high for a while. The markets think that it's going to come down very quickly. I think we think it's going to take a little longer. Then the question is...
How much longer? Do you have a sense of how long it
So, for instance, in the US, we think that interest rates will have to stay around 5% through 2023. Now, of course, you have to look at incoming data and you'll have to see what inflation looks like. But as of now, that's where we think it is. And the markets expect that there's going to be a rate cut in 23. So that's inconsistent with Fed communication and what we think. The question then is, what about 3 years later, right? Do we think we're going to be in this high interest rate world? And there, I'm less sure. I think there's a lot of uncertainty. There are forces that go in both directions. It's hard for me to point to strong evidence that says clear signs that we're going to be in a high interest rate environment for the next 5 years. That, I think, is a little more difficult to make.
What's your outlook on inflation? A lot of commentary seems to suggest that the belief or the consensus is that American inflation could potentially have peaked, which would have a bearing on the rest of the world as well. Do you share that, or do you see prices continuing to increase?
So more generally for the globe, we have global inflation expected to have peaked in 22 and then coming down, because we've seen energy prices come down and food prices come down, and that's helping. But the non-energy and food prices of pieces of inflation are still quite high in many countries of the world. In the US, we are seeing inflation come down, even in what we call the core inflation aspect of it. So monetary policy is working. We are seeing the effects. We're seeing inflation come down. But it's going to take 2023, and for some countries, it's going to take into 2024.
Speaking of inflation, we're seeing runaway inflation in Pakistan. The RBI governor spoke of how there's a sense that in South Asia, like what we saw with Sri Lanka, it could potentially have, we could see a similar situation play out in Pakistan as well. How concerned are you about what's happening in Pakistan?
Well, we do have several of our member countries that are in a difficult position. Sri Lanka is one of them. Pakistan, of course, including what we had with the floods in Pakistan. So, we work very closely with our member countries.
Are you concerned that Pakistan could default? It seems to have only $13 billion of reserves all told just left, and the economic situation seems to be very precarious.
These are difficult times. We're working very closely with all our members, including Pakistan. We'll see how things play out.
But what are your prescriptions for what the country should be doing to try and recover from the precipice?
We work, as you know, we have a program with Pakistan, and there are many aspects of it. There's a fiscal position that has to be improved. They've had a loss of foreign exchange reserves. The flood has been a huge problem, of course. So we're working closely with them.
That's just Dr. Gopinath being very diplomatic, commenting on Pakistan on an Indian news station, but that's fine. We'll see how the IMF tackles the economic situation in Pakistan. This is also the year, ma'am, of India's G20 presidency. You were in India recently. What's your sense of what could potentially be the Indian legacy? What do you think India should be working on in this one big year as the president of the G20?
Well, this is a very important year. Firstly, like we said, we need to make sure that countries cooperate. So I think just if one can deliver on that and make sure that we have good discussions at the G20, that will be very helpful. More specifically, India is a leader on the digital public infrastructure. I think that is a contribution it can make to the rest of the world on digital infrastructure, but also more broadly, I think the work that's being done right now on cryptocurrencies and other kinds of digital assets, to be able to have some sort of common principles that the world agrees on and how to deal with this particular asset class. I think that will be very helpful. The second is on debt. We have many low-income countries in debt distress. We need a stronger debt resolution framework. We are working with India, so the IMF and the World Bank will work with India's G20 presidency to have a sovereign debt roundtable, and that will be a positive sign. Climate financing is crucial for developing countries. I think these are areas where India could really contribute.
But given the fact that there is a big war between Russia and Ukraine at the moment, and that the rest of the world also has its own challenges, do you think that takes some of the attention away from what the G20 could be trying to achieve in this year, and possibly increases the prospects of some of these problems not undermining the prospects of what could actually come out of a G20 presidency?
Rahul, we were very worried about this when we had Russia's invasion of Ukraine, and the many months after that, when it was very hard to get any kind of consensus at the global stage. I think a turning point was the November G20 Leaders Summit, when there was actually a communique that was agreed on, where the language said that this is not the era of war, that you cannot threaten the use of nuclear weapons. So, after a period when one was losing hope, I actually do think there are signs of hope.
You spoke of cryptocurrencies. The RBI governor in India would love to ban cryptocurrencies. Many memes populated on social media saying that's crazy. You can't possibly ban cryptocurrencies. What do you think is the most logical framework for global economies and governments and institutes like yours to be dealing with crypto assets?
So this is the topic of 2023, actually. A single country can't go on its own here because the borders are fluid. Countries, you can do this, you can have regulations in one country, but that will not be enough for the rest of the world. We see absolutely good grounds for regulation, and that is needed, and we're working with India on this as part of his G20 presidency to bring the world together to agree on a common set of principles.
Could you give us some sense of what that regulation could potentially be like, in actual terms?
I think I would rather not go into specifics at this point because we're working on a concept note and we will have that, but we'll have that relatively soon.
So hopefully we'll have you back for a conversation around the concept note that you put out, because that is indeed of immense interest to people who are watching, because many of them have actually invested in cryptocurrency and are very worried about what happens to their investments next.
Well, they've had a pretty rough time already these last few months, as you can see.
Yes.
It is a very speculative investment class, and you can have what they call a crypto winter, which is what we're going through.
It's quite cold here as well, but it's freezing even more if you own a crypto asset. Thank you very much, Dr. Gopinath. Let me not freeze you any further. Thank you for joining us.
Thank you.
Thank you. Thank you very much.